Okay, guys, good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up or L and C right now, meaning you type L and C. Right, morning to you, Anthony. Morning to you. How about the rest of you guys? Morning to you. Thank you for waiting. Apology for starting about half an hour late because I need to attend to something important. But nonetheless, today's MAO is up. A great time to see you once again. The last time we have MAO is out was 1 week ago, right? 1 week ago. Yes, indeed. Yes, because we have a bit of technical problem and that's why we were delayed it. But I'm glad to be online with you guys once again. All right, today's the 15th of August, Monday. All right, all eyes on Walmart and US dollars. Now, over the weekend, I have been asked the same question over and over again, and people's asking me, Kel, is the market going to go higher? Now, this is a very incredible turnaround because just 1 month ago, everyone around me was asking me, will the market go lower? 1 month later today, after 4 weeks of rally from the US market, where the Dow Jones, Nasdaq, S&P 500 went up more than 5%, collectively now, all right, everyone is asking me how high the market can go and go higher. Now, this is a very incredible twist of plot right now at the moment because 1 month ago and 1 month later, nothing have changed. Yes, Cal, you are under the rock, some people say, because why? The CPI data has came from 9.1 to 8.5. Now, I already mentioned to you guys that the CPI data will definitely be coming down. This is no-brainer. This is no-brainer because everybody knows that the crude oil price has came down. Look at the latest CPI data from the source directly. We saw the energy prices coming down by 11.7 points. So which means that it is quite a fair bit of drop here. But at the same time, the collectively, if you talk about the 9.1 minus 11.7, you should have a lower number, right? But how come the number is now still 8.5? It's because the food prices has went up. So the market is focusing on the wrong thing because when you're looking at that with the expect here itself, right? We have a problem. Food prices and all the other stuff is increasing in prices, but because the energy prices came down, the market is actually focusing on that. So this is where it gets very dangerous and over here right now. Now, simply put, Walmart will have their earnings before market on Tuesday, tomorrow, which means that if Walmart actually do well and the earnings is better than expected, Walmart shares will likely be the main catalyst propel the market higher. All right, look at this Walmart price now immediately. Okay, I want to show to you right now immediately. Okay, moment a minute. I take away this one here. Okay, we have Walmart price first to begin with. Okay, this is the weekly chart. Let's go to the daily chart. Okay, here we go. This is Walmart price action over the last 20 days, 30 days, sorry, last 3 months, sorry. And then we compare this with the S&P 500 right now. You will see that the incredible similarities in their price action. Can you see that? Okay. So now what we saw is this. We see that the thing are moving in tandem, right? Okay. So it's pretty clear to understand that if let's say Walmart share price really goes down because the earnings is bad, because when they say over here, they told you the earnings could be bad. Over here, they tell you that the employment is, they're cutting employment. So if the earnings really come out and it's bad, then of course the Walmart share will open lower, right? So it'll be out at 16th of August, as you can see right here, okay? But the thing is this, the S&P 500 and this Walmart share seem to go in tandem. So if let's say now, if Walmart shares goes down, then the S&P theoretically speaking, should be also be coming down. And of course, if that is going to happen, mathematically, we can see the S&P going back down to 4,0450 level. Okay, so this is something that you, of course, at this moment now, if you ask anybody to think about this and consider what I just said a moment ago, no one will believe in this. But again, I repeat myself again, I'm not saying that it will happen. I'm saying it really have to basically based on the potential outcome, of the Walmart share. All right. So what if the Walmart earnings become better than expected? Because why? On the flip note itself, right? You can see on the side here in a moment, yeah. On this note here, excuse me, you can also see that when the share price get down because of the earnings expectation, right? You can see the market found a base, huge volume came in. Although the volume declined along the way down, which is quite suspicious, the market recovered and covered the gap. Okay, fair enough. Then after that, after a few days later, they talk about their employment. They cut and reduced, but again, volume came in and then declined. And then the share price recovered. So the question is this actually all fake? That means that they are actually putting a share price down so that when the earnings is better than expected, boom, it may go higher. Now, it is possible. And if that happened, the S&P 500 will easily hit 4,400 mark. Okay? If that actually happened, then S&P to hit 4,400 mark will not be a difficult problem at all. So this is something that you must take note with this expectation within for Walmart. So all eyes will be on Walmart, yeah? Okay. Now, what about the US dollar? Later on, I'll talk about the US dollar, and that is where the concerning factor here. The US dollar, if let's say it doesn't perform well, we also have a problem, okay? Walmart, this is something that you understand. Walmart and this US dollar will be a very important aspect here. Okay, let's go. Now, before we go into that as well, once again, we'd like to give a round of applause for Ames, who has successfully became a proud regional partner for Asia, okay, with Borussia Dortmund. Now, Borussia Dortmund is the number 2 team in Bundesliga, all right, in Germany. And of course, in terms of ranking itself, right, they're in a top space. Now, this Ames is our broker that we are using, and also our proud business associate when we later on launch our crazy app shortly. So that's the reason why we are very, very proud of this moment, and of course to be invited down on last Saturday so to witness the incredible ceremony was fantastic for us. So once again, congratulations to you, Ames. Well done. All right. So that's why AIM is our proud sponsor for our TWB. Now, something that I want to share with you right now, guys, in advance, okay? In the coming future, I think by September, I will not be doing MAO like this way anymore. What I will be doing is that I will be doing on recorded video, like all YouTubers, and upload the video, the shorter ones, on the YouTube channel. Okay, so which means that, right, it'll be a shortened version of MAO, and I will be doing what they call uploading to YouTube. Now, from there itself, right, if you want to watch it, you can watch on it through this YouTube channel. Now, what's the rationale of doing that is because we're going to concentrate on other development, which is on the crazy app that's coming very soon. So that's why right, not now, don't worry, it's not immediate, but definitely likely it'll be happening by the start of September. So just let you know how we're going to go with this. All right. So if you think that you really will, you're not going to miss out MAO. You're just going to guess that you have to watch it in a different way. And of course, the way I try to share with you is different. And of course, this thing is that it'll be all done on daily. So that means that you're still getting daily update just at the shorter version. Okay. All right. So thank you very much for all the support itself. Thank you guys once again. Okay, so the thing is this is a joke of the day that I've been watching telling people say, look, complacency is fine when the thing is recovering well. But one thing to note in trading world is how you must be very, 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 very careful that you do not want to be too complacent and forget about the potential risks coming along the way. Okay? All right, this is something that you must really understand. So now the thing is this. Whether or not the bear is lurking around the corner, we cannot be sure, but we do have problems surfacing in the economy. And this is something that later on in the alternate market news, right, I need to share more details with you. You really don't want to miss this, yeah? Okay, hold on a minute. Okay, so let's just continue on this and you will know what to do later on. Now, this is the seasonal pattern that I shared with you guys. Now, August month is known to be the time period usually pretty flattish until the later part of August. So now you can see that we don't have that. In fact, the market was pretty strong the last 2 weeks. So again, the seasonal pattern did not really display exactly what it should happen, right? So again, this is a seasonal pattern, may not be always the same. All right, but of course, from then on, after that, September should be a very nice, upside before it come down. So we're not too sure what's happening right now, but at least this is what the seasonal patterns say for coming September period. Okay, for more detail, you can go to the equity clock on this itself, right? Okay, you can take a look on this on your own, yeah? Okay, now the thing is this, last Saturday, we have a very eventful webinar preview whereby about nearly 80 people came online. Now, it's a very early webinar preview at 9 a.m. So I do understand that a lot of people couldn't really wake up in time, and it's a Saturday. It's considered a long weekend for some parents in a way because their kids are at home now. Yeah, anyway, my point is this. We have already uploaded the video on Facebook. Yes, we have already uploaded the video. And if you think that this context here, like the balance sheet and the Federal Reserve the current P ratio versus the 10-year real rates, all this information, if you think it's kind of like your cup of tea, then consider to go online right now and watch it. Okay, the replay is available on Day Trade with the Boys Facebook page. Now, one thing to note, this coming Saturday, I will be this Saturday, Sunday, Monday, I'll be conducting my 18 intake. Now, this is going to be very, very important because this is my final in-person coaching, because before I embark to a new movement here, as you can feel it right now, I'm going to go into my app selling. I'm going to do into online coaching. I'm going to go a lot of different things at the same time. So because of that, that's why you can see me promoting quite a fair bit recently, yeah? Because it's just about promotion and getting you guys ready for that. Now, I'm going to conduct one live session. Yes, live session to showcase how we use the TWB system. And it'll be at 9 p.m. to 10:30 p.m. on Wednesday on the 17th of August. Now, it'll be live on Zoom. That means that you need to register for it. Then you can come online, okay? Now, of course, this is primary for non-student so that you guys can actually feel the TWB system better. And of course, at the same time, you can ask me questions about which counter and stuff like that. Obviously, it'll be more on the US counters. It'll be on the indices, Forex, commodities. I can cover all this for you within the 90 minutes space, okay? So more details will be out later in the afternoon and registration can be done also at the same time. Now, of course, TWB student, if you want to join us, of course, feel free to join in, okay? It's a live session on the 17th of August, Wednesday, okay? All right, don't miss it, all right, guys? Okay, of course, that means that we'll go into the live trading period at 9:30 a.m. Yeah, of course, that is where 9:30 p.m. And that is whereby we will actually see the market live in action, okay? So more details coming up later today, okay? Now, wow, look at it. The fear and greed index itself is incredible. It's incredible. It's 55 right now. Wow. So now we are already moving towards greed. In fact, greed itself is after 55 or 56 to 75. So what is happening right now? That means that everybody is enjoying their success. Wow, okay. So we are having a market now recovering from the bottom, down up by 10% from the lowest point. And now we are actually back to a potential greed level. Wow, this is really incredible. Let's look at the chart more in time. Okay, let's give me a minute. Okay, moment, yeah, not here. Moment. Oops, sorry. Here we go. Okay, so everybody take a look. This is the fear and greed index right now. Okay, just check the tone a little bit. Yeah, moment. Yeah. Oops. You can see right now in terms of numbers, we have 55, right? 55. The last time you see 55 was in April period. The last time you saw was in January period. Then after that, it's all right. We have the downfall back in this November period. Okay, so we have April and January period this year where it went past 55. Okay, so what is leading this movement right now? Let's take a look at the numbers. Okay. Now, first of all, you can see that the S&P 500 has recovered above the 100-day and 25 days moving average. So by right, we should be in the considered as greed area, but I don't know why they put at fear. That's interesting. But definitely in terms of strength, strong strength, the stock price strength is definitely going up itself, right, to almost zero level. That means that people are getting very happy with the current stock prices. In terms of the McClellan volume summation, right, the volume is still at a very low level. That's why it's quite incredible to see it actually. We are near to most of the grid area. Now, very clear, the put and call options are very low at 0.77. If you flip it the other way around, it's about 1.3. That means that a lot of people are now very bullish. The call options is high. The last time we see something like this is right, was back in this June 9. Okay, then after that we have it again back in March itself. So if you remember the time when that was happening, we saw the stock market coming off. So again, this is something to take note. Then the market volatility in terms of the VIX and the moving average is very far away from one another. Of course, the VIX has now went down to 20 level. Of course, the things I've been calling for buy on VIX. And I told you guys, if you don't mind buy some VIX, it's good to buy because the downside is kind of limited. Now, the VIX basically tells me that, right, the lowest can go is about 15. So if you buy a VIX right now at 20, example, you buy at 20, right now it's a buy, your lowest you can go is 15. Now at 15 itself, you don't need to really stop loss. If you want it, you can do it. But I'm just saying that the 15 is the lowest point. So the upside itself is 35 and 40 in fact. So look at it, right? The risk to ratio itself, here is 1 and there is 3. So the risk reward ratio is 1:3. That means that if you buy a VIX right now at 20 and you sell it at 35, you're actually taking a 1:3 risk reward ratio. But again, it's an individual thing, yeah? Okay, look at this now. The safe haven demand, we are past the 0%. So that means it's kind of bullish right now. And of course, the junk bond demand has went down, right? Because why? When the so-called stocks are doing well, usually people dump the bonds, all right? Because they rather say, okay, you know what? Let's just not buy the bonds and waste time. Making 2% doesn't mean anymore. Let's just buy something better. Okay, that's what they are doing for the junk bonds. Okay, so overall, if you add up everything, it's right. It seemingly mathematically tell you that we should be at the 55 region right now. Interesting, yeah. Okay, so anyway, I said quite a fair bit. You go and make your final decision on this. Okay. Now, let's look at the economic data for a short moment. Now, the CPI data was really incredible. The market is looking at 0.5 for the month-on-month. It went down lower. And the year-on-year from 8.7 dropped, the 9.1 dropped to 8.5. That's a very big drop, right? And of course, the inventories of crude oil also went up. That shows that there's a lot of supply of crude oil available in the market. So if these two news come together, that's why the stock market improved quite a fair bit. And of course, the initial jobless claim was kind of like pretty flat accordingly. Now, it was actually much higher than the last time, but the market don't really care, yeah? Because the PPI data was better than expected. The market was looking at 1.0, looking at 0.2, but the market come out as minus 0.5. So it's much, much better than expected. So because of that, straight away, the market bolstered to the 4th straight week of upside. Yeah, okay. So the interesting part is this: how can we have the CPI data coming down? Obviously, I told you earlier. How can we have the inventories going up? Of course, we know what's happening in Russia. And how can we have the initial jobless claim rate maintaining at 260 itself? The market don't care because the PPI data is good. So now with all this so good data, obviously it's all right. What if the core retail sales actually improve? Wow. If the core retail sales improve, the market is going to shoot to the sky. But very interesting as well, right? They're looking at a lower number, but I'm not too sure what will happen next. Then, of course, we have the FOMC meeting on Thursday, and initial jobless claim itself, we're looking at 265,000, which I think will be higher than not. And the Philadelphia Manufacturing Index itself, right? They're looking at a lower number. That was much lower back then. So I'll leave it for you to decide. But my view is this: next week, it seems like to be a not so important week. So if the market want to do any form of profit taking, right, it will only be this week. So traders, you need to watch out for that, yeah? Okay, let's look at some local and global news right now to start the day. Now, we all know that the CPI data rose 8.5%. It's better than expected. So obviously, the market is kind of happy with that, okay? When the PPI data fell 0.5%, which is again a sign that there's some seems that the price is lowering down. But again, I repeat myself one more time, it's because the crude oil price came down quite a fair bit. That's why you have wholesale prices coming down. But if the crude oil price recovers or maintain above 95 US dollar and higher, then this will be changing back to the original. Now, of course, there is some good figure on inflation. It's a good week for inflation because it seems like at the peak. But the question is that can this really continue? That's a big question here. Now, it's very incredible that FBI actually revealed that they actually seized top secret document from Donald Trump's Mar-a-Lago, this resort home. But obviously, my point is if there's going to be any document that's so important, it will be taken out a long time ago, right? So a lot of time itself, right, they can tell you that they may do something here, but may not. I leave it for you to decide that. But Peloton actually slashes more jobs, as you can see right now that they are not doing that well. So why is the US slashing job itself and the market still doing well? I say it's all about money. And of course, UK has contracted the second quarter of this again. Now, apparently now the number has dropped. GDP has dropped by 0.51%. It is the one again showing that it's contraction right now. But of course, the rich are still buying. Tiger Club 21 or Tiger 21 and Exclusive Club is saying that the ultra rich are still buying a lot of shares. Interesting. All right. So we have them buying shares right now. But of course, they did not tell you when they're buying. They only tell you after they have purchased it. So whether this is actually for them to take profit, we don't know, right? And the incredible part is I saw this thing is from actually Taiwanese singer Jolene. Now it's targeted by Nancy Pelosi visit to Taiwan. It's really crazy. It's saying that because now, all right, she sing a song and now it's being utilized as a form of a Taiwanese support. Oh my God. There's even more other singers also got hit as well. Like Hebe also deleted 2 postings of her eating spaghetti. And because Nancy Pelosi have Italian heritage, oh my God. This is really insanity. This is really crazy. Just like anything they can write itself, right? Even if they have an American breakfast, also a problem. Okay, anyway, these are all the little news in the market and some trivia, but just let you know that this is what we will have. But it will be removed later on when we are doing this new version of this MAO on YouTube. Yep. Okay, let's look at the alternate market news, and that's where you get very juicy. All right, very juicy right now. So hold on a minute, get some water. Okay, now the thing is this. Is the bear not going to come out at all? Now, I repeat this many times before, all right? A bull market will always be there. And when will it fall? Is when you can see prices coming down and there's no answers to that. When a bear market is coming in, it will hit the market, right? Usually when it has dropped quite a fair bit. And then after that, everybody talk about bear. That's where the rebound is. But within a bear itself, right, when the market is rebounding, right, you come to a point where everyone tells you that, okay, you know what, the coast is clear. But you can see very clearly the market is still on the way down. So that is where a bear market is. So to put it simple, right, let's look at something that Warren Buffett has said before. Investors should remember the excitement and the expenses as are their enemies. If they insist on trying to time the market participation in equity, they'll try to be fearful when everybody is greedy and be greedy when every other are fearful. Now, I think this is a very powerful statement from this Warren Buffett. All right. So now the thing is this. Now everybody is going to get greedy soon. All right. As you can see right now, I'll just take a quick picture first before that moment. Yeah. Okay, you can see right now, right? I get invited to all this telegram telling you what to buy, what can you make, and stuff like that. Now, the better ones give you really technical aspect and they tell you in detail. This are not so bad. Now, I don't want to set the names because I don't want you to join them at all. But of course, later on, right, you see some of them will make incredible profits and they put these beautiful girls as a form of like a sucker puncher itself. And then all these things will tell you to be whatever. I think this is something you shouldn't be involved. And of course, they tell you that, wow, what can you do right now, right? Sure can make, right? Wow, this is usually the problem. And of course, when you have people like even using fake, profile, like this is Thomas Lee, obviously is the famous guy, right? If they use fake profile to bring you in, then obviously it's all right. You shouldn't even be bothered. Yeah. Now I've been observing this out of Telegram for a while because I just want to see how they write. And you can see there's always a lot more what they call helpers around. So when someone say, "Oh, I make money," they'll say, "Yeah, I also make money. Yeah, I mean, how much? How much?" It's really more like the ABC scam. So that's why you shouldn't be involved in this. Yeah. Anyway, my point is this. This is what usually happens when everybody tell you that you can be greedy and make a lot of money, right? Things really get bad. Now, I want to bring you something that I shared with you quite a bit of time ago. Remember about this chart here itself. How many of you remember this chart? I showed it to you guys during one of MAO about a month ago. Do you remember? Okay, so first of all, I told you, right, S&P is a very important crossroad right now. Once it crossed the 4,000 mark, it will move back to 4,003. And we are just moments away from 4,003, okay? Now, I told you that if you get rejected at 4,000, you go back to 3,007. And if 3,007 breaks, it can go down to 3,002. So now where are we? We are scenario A right now. The market broke above the 4,000 mark, and now it's moving towards the 4,300 mark. Okay, so you can see that whatever I share with you, right, really is now manifesting. So the question is this: what should we do next? Well, let's just bring a chart in right now. Now, this is what they have. You see in S&P 500. Now, S&P 500 did actually came down from the 4,000 mark initially, came down to 3,700 area, almost there, 3,650 area. And then it went all the way up again now to 4,280. We are just margin away from the 4,300 mark. Now, do note, a lot of houses are calling for 4,003 to hit. And apparently when everybody calling it out, right, and volume doesn't stop there, we do see it going up, right? This is something that you must take note of that. So, but once it hit 4,300, I think you should be very, very careful already. Now, because why? This is something that I want to show this for you, okay, guys? This is actually from Bloomberg. This is from Bloomberg. Now, remember this, I mentioned this to you, right? 2022 chart, if you superimpose with 2008 chart itself, right, you superimpose them, you will likely see a very incredible chart correlationship between them. It seems that 2022 and Adriel, don't put the umbrella at home, and then 2008 are quite similar and identical. So in short right now, right, are we going to be near a toppish moment? And after that, will the market be pulling back down to go for a new low? We don't know. Okay, but then we cannot deny that this chart itself, right, we move back this chart. You can see that the relationship itself is quite incredible. It's not perfectly identical, but in terms of tandem, it does move accordingly. So now the thing is this, back in 2008, we have also seen the market breaking the previous high. Now we just saw it breaking the previous cycle high. And now we're going to have this further upside. Now, of course, it may go to 4,400 first, then maybe come down. But that is only if it follows the pattern. So we're going to look at it with more details to understand this better. But incredibly, that this is actually from Bloomberg. You can see, this is actually from Bloomberg. Okay, you can see at the bottom corner here as well. It's not anybody's drawing. All right, it's the copyright from Bloomberg. And of course, we're talking about showing here itself. So actually, I'm doing something wrong also. Okay. All right. Now take a look here itself. Right. This is the comparison of 2008 and 2022. Now back then itself, right, we have this M-shaped momentum. We have the M-shaped momentum now also. Then after that, the market rebounded. And the best part is that we rebound was more than from the it rebounded more than 50%. It also happened. Then once after it crossed the 50%, wow, the selling just came down, right? So the question is this: will this be the same thing? Hit the 50% and then come down? We don't know. But apparently itself, right, it is possible. It is actually mathematically possible. Okay. So you look at it right now, right? On this chart here, it's going to get crazy though. In 2008, right, the market was doing sideways. If you do the 50-day, 125 days, and 200-day moving average, right, the market actually crossed it nicely. But when it hit the 200-day MA, it actually stops there. And after that, wow, the cascading effect. Now, that was what in 2008. If you look carefully now in this 2022, you do see a incredible similarities between them again. So the thing is now, if with the S&P 500 is to do the same thing over here and hit a 200-day MA, that means that you hit about 4,300 area for the S&P 500. Okay, so will that be the sign of the market coming down? Because this is what happened back in year 2008. So a lot of things is happening at the moment now. It seems similar, but of course, if this thing broke through all, then of course they say you that, oh, okay, no more already. Okay. Now, one thing that I'm very concerned is that you can see the data across the board. Now, this is the US, Chicago PMI. The numbers are actually falling overall. This is something that we have to be very, very careful. And after that, if you look at the government 2-year, all right, you can see why am I concerned. Now you can see that at the moment right now, right, the 2-year rate is now all the way back to the 3% mark. Okay. Now we also notice that whenever the yield is at a high, the S&P 500 will usually pull back. So the question is this: can we see a pullback on the S&P 500 as compared to now? Everybody is actually talking about, going to just 3,000, 4,000, 4,005, even 5,000. Okay, let me explain this to you guys. Okay, take a look here. You can see that in a very clear pattern, there were incidents whereby the yield goes up, stock market also go up. There are also incidents whereby the yield come down, the stock market came off. So the problem is this is all depending on the cycle right now. Now, what is the fear factor is this. Now, we all know that inflation prices has went up. So that's why prices went up. So earnings go down, right? It's quite pretty simple. But what if inflation persists? Then, of course, then what happened? Prices will go up higher, right? And earning will also be moving steadily upwards. Why is that so? Because everybody will be, still have to go and eat, and buy stuff. But if the people say, you know what, we have enough of this buying, we're going to reduce this a little bit, then of course, right, even the price goes up, right, the earnings may fall. So in short itself, right, I'm trying to say is this. Now at this stage itself will be all based on the earnings than the price action. That we're talking about revenue versus market cap. So that is the reason why you can see that now the S&P 500 seemingly still not too far away from the all-time high, but in terms of the now what's happening here is kind of scary though. Now, what is the one that I'm quite very upset on is crude oil. Now, remember when crude oil was trading at around here about $120, I say that avoid crude oil, don't play crude oil, get out of crude oil. Because I say that something is very wrong, and then everybody telling you that crude oil is a buy, but it's not going up, right? It's a very wrong thing to do. Okay, all right, very wrong thing to do. So what's happening right now? You can see that the crude oil prices is now incredibly coming down very nicely. So this is a problem here. Crude oil price goes up, inflation goes up. All right, so we understand this pretty simple. But if that's the case itself, right, economy usually will be coming down. That's what we all understand. But if this equation is if equivalent is equal, then by right itself, right, crude oil goes down. Okay, right, crude oil go down, right. Economy by right should go higher. But what if the economy is not doing well? Then if let's say inflation stays up, then we have a problem, a major problem. That means that we will have a stagflation, whereby inflation continue to go higher, but earnings is not coming in. Now, how can earnings be not doing well? It's because the reason why crude oil price is coming down is demand and supply. Now, if let's say there's an overwhelming of supply and causing the demand to fall, that is good. But if let's say that it's not supply that's causing it, but it's actually people who are very fearful that the US economy or the world economy, they actually believe that the oil price should go lower. Okay, and then what happened? Then what will happen next? That means that the economy itself is not well, and the economy is not well itself, right? Even though you had the price lower, people may not want to buy. You understand my point? Is that the interest is no longer there, right? No matter what you tell me, it's no longer good or worth it. So my view is this: if let's say now, if the crude oil price really come down, and the earnings also come down, oh no, we will have a really big sell-off in the market soon. So again, traders, be very, very careful what I just shared moments ago. And of course, one thing that facilitates my thinking is this Baltic Dry Index. Now, Baltic Dry Index is actually the index that calculates the number of freights going around the whole world. But you see, the crude oil price has came down, right, over the last few months, but the freight index actually goes down. That means that, right, you can see that the index now at the high was at 5,000 to about 5,005. suddenly it just dropped all the way down to the same level back here itself at about 4,000 level. It's around here itself at 1,400 level. So the question is this. The last time we see something like this, it was also here, whereby we have the market coming down, whereby the Lehman Brothers was coming down at a very fast speed because they couldn't handle the energy involvement, the logistics side. So now the thing is this, now the logistic is at the lower bandwidth. That actually tells me that, right, the world economy is not doing as well as we've seen before. And if you look at it again, whenever you see it around this area itself, right, this was where before the market really sell off, okay? So again and again, I said this one must be very, very, very careful. If let's say that the Baltic right now is not doing well, the PMI is doing well, the unemployment is actually increasing, actually you shouldn't have the current, what they call, situation right now where the stock market keep on going higher, okay? So this is the Baltic Dry Index, and I said again, this is not a very good thing. Something is definitely very wrong somewhere. Something is definitely wrong, and they say if the Baltic Dry Index really catch it, that means that there's a global chance, there's a global recession coming in very, very soon, okay? All right, so a quick one over here right now. Let's look at the charts for today. All right, the bull goes moo, the bear goes grew, and the flamingo is different this time. Let's take a look. Now, good job for AIMS. Our TWB system is back to working again. Let's take a look at the market today. Now, we can see very, very clearly now the China A50 has tried to break above the MA30 moments ago, but it failed. And of course, now it's below the 200-day MA. So that means that this is going to be very dangerous. Okay, so now what you see is that now it's below the MA 200, then it's now touching the MA 30, and now it's not able to go higher. So same thing again, the market had lost the 1410 support level I mentioned long time ago, and yes, when the market went down, okay, and of course I'm pretty sure something had happened in between, right? Then after that, now we have a rejection at the MA 200, so which means that the next stop itself will be here, and that's 13,145. So without enough put movement itself, right? Okay, the market don't get any support from the market, coming down to 13,145 is really possible. But of course, the last time we see it happening, right, the technical rebound is very strong. So let's see now at 13,645, we are about 500 points away. Let's see whether is this going to be a fake movement or this going to be a real movement then. Okay, here we go. Let's look at the US market right now. Now, the US market at the moment for today is still pretty clear. The upside is still there. It's no color change. The color is still yellow. It's above the MA30 and MA200 and also above MLP. So it's kind of bullish for today. But as long as the market stays below OP now, there's no upside potential. But if the market goes above OP, yes, there will be upside potential. How high will it go? Incidentally, it's actually going to the KCB, which is very near to the pivot one at the same time, 34,037. Okay. Now this is the Nasdaq. Now the Nasdaq today, we have to watch the Nasdaq today. The Nasdaq today itself is also, the two MAs are above it, and the Nasdaq is also above it. The KSI is running green, so everything looks good, right? But the thing is this, there's a short BMB minus 191 over here. And so if the market basically stays up instead, it can go all the way up to 13,683 for the NASDAQ. But if the NASDAQ couldn't stay up, then MLP at 13,446 will be the support now. Now, if you ask me at the moment now, the indicators are all more towards the upside. You cannot deny this at the moment now. S&P 500 today is now very nearby the pivot 2 level at 42.68, which is actually right now. If the market loses P2, we all know that the first target it will go with 42.26, okay? And then after that, the next level will be 41.63. So pivot 2 is a very powerful support and resistance at the same time. If it stays above it at 42.8068, the upside will be there. But it's going to be like the example that if the market goes below 42.68, then the selling could be bringing it all the way down to MLP level. Yeah. Okay. Now let's look at the Japan market now. Nikkei continued to stream higher. Now Nikkei basically came down, that they hit the BMB support level very nicely. And then after that, you can see it spring up all the way, broke above the RL and hit the BMB extension within a single day itself, 38,632. Now, from the way looking at it, it's still moving higher and likely it's a yen crisis. So you can see it coming to 28.988. Okay, it's moving towards that. So I believe that just take note of that. Okay. Now for Hang Seng today, you can see the Hang Seng indicator wise itself, the boys have been dumping quite a fair bit. That's why Hang Seng has very limited upside. Now Hang Seng now is still trading above MLP and also above the P2 level, so it's still okay. But definitely in terms of what you call temper itself, right? Hang Seng hit the MA30 and then rejected already. So now the thing is this, now it hit 281 and then came back down by 280 points. I'm not too sure whether this will stop. But if it continue to go higher, there's a BMB extension here at 20,689. And I thought that the most likely they'll be flying towards it itself, right? But now seemingly rejecting at the RL level, yeah? Now downside, only if it breaks P2. Now this morning it did break P2, but it wasn't a sharp break, so the market rebounded, all right? But if it goes below P2, then of course the first resistance will be the okay. Now this is DAX. DAX most likely is going to test 13,998 later on today because it's already above MLP and above the MA. But the interesting thing is 998 and MA 200 is very close by. So I suspect that the market will brush past MA 200, then go and touch 13,998. Then after that come down, because you can see that the indicator wise is telling you is KSI is red. So the upside could be limited, okay? Could be limited. Now, crude oil is the one that is not favoring now at the moment. Crude oil now is trading back to $90 and it's very near to the pivot one. It's very near to the pivot 2 level right now, which is 1952. So what if the market breaks below 1952, right? Then the selling will bring it back down all the way to $86 again. Now it's below MA 200, MA 30. So obviously the thing is that even they cannot save, right? So if the market breaks below the pivot 2, there will be some serious selling. So watch out for this, okay? All right, so we're done with indices. Let's look at the commodities right now, shall we? Now, gold price is coming off at the moment right now, although been moving up for quite a fair bit for the last probably like last 30 days. Let me take a look. Yeah, last 17 days. 17 days is about 1 month calendar week. 1 month calendar. Okay, so gold right now is pulling back. The boys are buying. There's no blue bars. That means that the bullishness is there. But now it's trading below MLP. Not too sure it's going to be a touch and go, but I believe that she will know the answer later. So the upside, it could be as high as 1805, but lower side will be 1788. And of course, if it goes below 1788, then of course there'll be some more selling to come. Okay, it's only if, let's say, it goes below 1788. Okay, all right. So watch out for these few numbers. Take note. Now, gold price is going up because of the dollar that's coming down, and the dollar is coming down because the bond price is coming down. It's going up. Sorry, the bond price is going up recently, and it causes the yield to decrease. Okay, all right. Then what you have is the silver price. Now silver, okay, wait a minute. Now, silver, we wanted to buy at about $18. You miss it by a fraction, and then let it go up all the way. Boys buying, no blue bars, very bullish. Now, for silver, $20.80 seemingly is a very strong resistance, right? You see that? So unless the market can break 2080, then it will go higher. And this time around will be 2120, okay? And eventually could be even going higher. Okay, so my view is this, okay? My view is pretty simple. All right, if the dollar strengthen, then of course we will see the silver and gold price coming down. If the dollar continue weaken, then of course this will go higher. Okay, it will go much higher. So now we all know the MLP is $20.55, and the what they call the master is at $20.45. So watch out for these figures. If the market comes down, right, these two have to follow through. So yeah. Okay, last two will be the Bitcoin and Ethereum. Let's look at the Ethereum first. Now, I already told you about my view on the Bitcoin movement. You can see that there's no blue bars at the bottom, meaning that it's very bullish the last few months. And the KSI is green in color. That shows that they propel the market higher. Now, by right, we should see the Ethereum hitting 2051 already by now. But for some reason, it haven't reached yet. Okay, doesn't matter. It's about time. And then after that, what you can see is that see that there's form of resistance at the moment over here. So unless the market reads the resistance, in order everybody just maybe just string, relax and go at home. Okay. Okay, and last but not least will be Bitcoin. Now Bitcoin is finding strength again this morning. In the last 2 days, it tried to break above 24,000. Really didn't really do that, but today it has stamped its authority at 24,800 now. The question is this: will that be the end? Well, I put it this way: I have, I watch this myself and I tell myself this 24,000 would be a good place to sell. So, but now it's moving higher. I just wait for a while. If we go back down to MLP, I will take a short position on this. Now, this is a very, very important app. Okay, there's a good reason behind it, right? So, take note of that. Yeah. Okay, so Bitcoin 24,000 is still my base. Anything higher is all right. You can see 25,720 because that is the highest, but I doubt it will go there. So let's see how it goes. If it's going up 25,920 is all yours. Okay. All right. So that will be all for today. So just to summarize up everything once again, guys, I'm saying that likelihood the main movement is tomorrow, and if Walmart shares really start to go down instead, then of course the S&P 500 might be dragged down. But if the earnings is good, it's all right, then we go higher. Now for US dollar, same thing. If the US dollar now is coming off and that's dragging the feet down everybody, then this is going to be a danger, because the US stock market, they love to see the stock market moving first before they actually get to continue their normal stuff. So the point is this, I'm trying to explain, is now it's nicer it's nicer at the moment right now. The market looks good, but we have to understand we have a lot of economic issue right now. So if you can see some profit taking, just take first without taking the risk. Okay. All right, that will be all for today. Thank you guys once again for waiting for my MAO. Like I say once again, thank you so much. This coming Wednesday at 9 p.m. I will conduct a live trading session, live trading session whereby I will showcase how we use the TWB system. Of course, please feel free to join us. Okay. With that, that's all. This is Cal signing off. Take care. Have a great day. Cal. Bye-bye.